Imagine a chessboard. On one side, a grandmaster with decades of experience, a deep understanding of strategy, and a creative, intuitive mind. On the other side, a machine, capable of calculating billions of moves per second, with access to every great chess game ever played, completely free of emotion. For years, this was the ultimate battle of intelligence, and we all know how it ended. The machine won. Now, that same battle is being waged in a new arena, one with far higher stakes. The stock market. In this corner, the AI investor, a tireless algorithm with the power to process the entire world's financial data in an instant. And in the other corner, the human investor, armed with experience, intuition, and a gut feeling for the market's pulse. In the war for your financial future, who do you bet on? The cold, calculating logic of the machine, or the nuanced, creative wisdom of the human mind? The rise of AI in finance has been meteoric, but as many investors are starting to realize, while AI can crunch the numbers, but only humans truly care. They argue that it lacks human intuition and emotional understanding. Today, we're staging the ultimate financial showdown. We will dissect the strengths and weaknesses of both AI and human investors to find out who should really be managing your money. The answer is not as simple as you think. First, let's make the case for the challenger: artificial intelligence. The power of AI in finance is built on three pillars that no human can ever hope to match. Pillar 1. Superhuman speed and scale. A human analyst, no matter how brilliant, can only read so many financial reports, listen to so many earnings calls, and track so many news stories in a day. It's a physical limitation. An AI has no such limits. It can scan and analyze millions of data points in seconds. This includes every quarterly report, every press release, every market-moving tweet, every change in economic indicators, and every fluctuation in currency values, all at once, all in real time. It's the very definition of doing the heavy lifting. It can detect patterns and correlations across vast datasets that are completely invisible to the human eye. Pillar 2. The absence of emotion. What is the single greatest enemy of the average investor? It isn't a market crash, it's their own emotions. Greed and fear. Greed causes investors to pile into assets at the peak of a bubble. Fear causes them to panic sell at the bottom of a crash. AI is completely immune to these destructive impulses. It doesn't get euphoric. It doesn't get scared. It operates on pure, cold, unbiased logic. It follows its pre-programmed strategy with ruthless discipline, buying when the rules say buy and selling when the rules say sell, regardless of the screaming headlines or the market sentiment. Pillar 3. Tireless, 24/7 operation. The market never truly sleeps. When Wall Street closes, markets in Tokyo and London are buzzing. A human investor needs to rest, to recharge. An AI does not. It can monitor global markets around the clock, analyzing data and executing trades at the optimal moment, day or night. It is the ultimate, ever-vigilant sentinel for your portfolio. On paper, the case is closed. The AI seems unbeatable, but the stock market isn't played on paper. Now, let's hear the case for the reigning champion, the human investor. Our advantages aren't based on processing power, but on something far more elusive: wisdom. First, and most importantly, understanding context. AI is brilliant at reading the data, but it struggles to read the room. It can tell you what is happening, but it often can't tell you why. A human investor's greatest strength is the ability to understand the context behind the numbers. As one market observer noted, AI cannot predict sudden geopolitical events or understand cultural nuances affecting investor behavior. An AI might see a company's sales are down, but a human can understand it's because of a temporary supply chain issue caused by a storm. An AI might not understand the long-term vision of a brilliant but eccentric CEO or the cultural shift that a new product is about to create. A human can connect the dots in a way that data alone cannot. This is the human expertise that remains essential. Second, emotional intelligence and personalization. An AI can be programmed to understand your risk tolerance based on a questionnaire, but can it understand your life? As one analyst points out, financial decisions are deeply personal and often driven by emotions and specific circumstances. A human advisor can understand that you're not just saving for retirement, you're saving for a dream of opening a small bookshop by the sea. They can understand your anxieties about your children's education or your desire to invest in companies that align with your ethical values. They act not just as an analyst, but as a behavioral coach, helping you navigate your own emotions during market turmoil. Third, practical, real-world wisdom. AI learns from historical data. Humans learn from lived experience. There's a crucial difference. An AI's recommendations can often be theory-based, mathematically perfect, but lacking a connection to reality. A human planner, having lived through multiple market crashes, offers practical advice born from experience. It's the difference between reading a book about how to swim and actually having been caught in a riptide. That gut feeling, that intuition honed over decades of real-world successes and failures, is something that cannot yet be coded into an algorithm. The biggest weakness of AI is the very foundation of its strength, its reliance on historical data. AI is brilliant at identifying patterns that have happened before, but it is fundamentally incapable of predicting something that has never happened before. These are known as black swan events, rare, high-impact events that are impossible to predict from the past. The 2008 financial crisis, the global pandemic of 2020, a sudden geopolitical conflict. These are events that break the models. An AI trained on 100 years of market data would not have seen them coming because there was no precedent. This is where human adaptability shines. We can imagine the impossible. We can react to novel situations with creativity. When the rules of the game suddenly change, a human can throw the rulebook out the window. An AI can only report an error. The market is not just a mathematical system. It's a complex, adaptive system driven by human psychology, politics, and unpredictable global events. And in that chaotic arena, pure logic isn't always enough. So, after all this, who wins? Perhaps the entire premise of the question, AI versus human, is wrong. The future of investing isn't a competition. It's a collaboration. Think of it like a modern surgeon. The most advanced surgeon today doesn't compete with a robot. She uses a robotic surgical arm to perform operations with a level of precision she could never achieve on her own. The robot does the incredibly precise mechanical work, but the human surgeon provides the judgment, the strategy, and the ability to adapt to unforeseen complications. This is the most powerful model for the future of investing. The consensus among forward-thinking investors is clear. Let AI analyze and expert advise. The optimal approach is a hybrid one, where AI does the heavy lifting and human advisors add the emotional intelligence. In this model, AI becomes an indispensable tool. It acts as the ultimate research assistant, screening thousands of stocks, identifying trends, and running complex risk analysis. But the final strategic decision, the one that takes into account the client's unique life and the world's complex context, remains firmly in human hands. We should use AI for support, but one shouldn't depend solely on its advice. So, who wins the battle for your portfolio? The answer is neither, and both. The winner is not AI. The winner is not the human. The winner is the augmented investor, the human who wisely leverages the power of the machine without abdicating their own judgment. AI is an incredibly powerful tool that can make you a better, smarter, and more disciplined investor. Use it for its strengths: data analysis, systematic screening, and removing emotion from execution. But never discount the irreplaceable value of human wisdom. Your own understanding of your life goals and the guidance of an experienced advisor who understands the complex tapestry of the world are assets that no algorithm can replicate. As experts agree, human expertise remains essential. The future isn't about a robot taking over. It's about a human empowered by a robot, making smarter decisions than ever before.